to the moon? No, you don't want to launch things into the moon. That sounds dangerous. What you want to have is a nice sort of Elon Musk landing on the moon. We'll start this one again. Ethereum prices are on the up and up. Isn't it great to see? Is this off the back of a head and shoulders on the charts? Potentially it is. Let's take a look at the Ethereum price versus US dollar here and really establish if there's any key things that we need to know right now in the price action. Thanks so much for joining me. Really do appreciate it. Likes and subscribes go a long way. Please come on back into a live stream sometime because they're such a good laugh. And we're back, and as you can see down there, we're actually doing a live stream right here, right now. So if you join us for a live stream sometime, you'll see me making the clip that you're kind of watching now for everybody else, but there's always more around it. It's always good, and you can talk and we can interact and you can learn stuff. Anyway, right now I'm looking at this and saying shoulder, head, shoulder, neckline, we're above it so far. Lovely to see. What else is lovely to see? Golden cross, death cross, sorry, over here on the 4-hour time frame. The 50 simple, that's this red dotted line, is crossing over this white dotted line over here. That means that there was a death cross. Okay, so that's not so great. However, we've since gone up and we first off we tested the 50 simple here, then we rose up past the 200 simple. That's great to see, but of course we could be in for a retest of these things. What I want to see is these coming in for a cross, right? A couple of things then that we'll work through. First off, let's just call this the yeah, let's call that the neckline of the that's a shoulder, that's a head, that's a shoulder. Yeah, that's the neckline, right? I'm going to leave that in. I know it sounded terrible, but I'm not going to be bothered editing that out. Right, so that's the neckline, right? And here is the measured move coming up for us, right? So it would be something like that, and we'd be looking up to prices of $2,000. I think that makes a lot of sense right now for what we're looking at if we do get carry on up the charts. But actually, I tell you what, if you actually watch my last Ethereum video, you'll get to know all of the price action which is happening right now. We actually spoke about this in great detail, and not only that, we predicted the future. Yeah, I know, nobody can predict the future. That's obviously BS, but we did talk about it, and we said that where the prices could go. We have a big $1,800 sort of potential resistance point. Looking over here, seeing that we had this inflection all around this zone. When we broke down past it, we came back up and retested just here. This is a big deal, this area. If we actually see a turnaround from this point, what could it potentially be? Well, it could be a retest of the neckline. We could then see as well, if we do continue on up the way in the near future, that we get a golden cross between the 50 and the 200 simple. And when that happens, the 50 simple so often gets tested in the immediate aftermath, and that would be a pullback. So can we actually push on to 2,200, or will we see some inflection? Well, we could. So key targets to be bearing in mind are of course the $1,800 area. Looking at the prices right now, that's only $10 away from where we are right now. So if you see this and the prices have already dropped down, don't panic. This was kind of natural, so to speak. If we push past 1,800 by the time you're watching this, then it's going to have to be, are we on the way towards 2,000? And the chances are that we may well be. But again, looking out for that potential turnaround. There's another area in between. I want to point it out. It's 1886. It sounds like a lovely date. Jumping up towards the 2-day time frame, just so you can see like the reasons for this. The 786 Fibonacci retracement point is in there. Now, of course, pushing on past the $1,800 where the golden pocket is very, very much key. Are we going to do that? We could. Is the 786 that likely to turn around the prices? No, it isn't. Worth bearing in mind just where that is, though. If we come back down afterwards, we could be looking at various other targets. Good entry points thereafter actually start popping up again in it around about the 1666 area for us if we need to retest things. Okay, there are plenty of things to be aware of. We actually have a cross here on the DMI. Lovely to see, although it is below, the ADX is below 25, so it's not really fully strength of trend, but that's pretty good. And actually comparing that over here with a 24-hour time frame, we're seeing a cross happening right here, right now. Now, of course, as well, the ADX massively sloping towards the downside, but it's in a decent position overall in terms of, can we just capture that? Can we capture that momentum? Now, if you want to think about that, it's kind of the difference between a hard stop where the direction of travel kind of hits a brick wall versus the momentum of the direction of travel kind of getting pushed slowly around, where your momentum can kind of stay, and you do that Indy 500 racetrack circle thing instead of just hitting straight into the wall. Ideally, with the, I don't know, maybe being a bit too esoteric here, what I'm kind of saying is that we're in a decent position, strength of trend wise, to kind of, you know, take that momentum that was going towards the downside and help us go towards the top side. But we obviously have to make it past those key areas I was talking about. Things that are looking good for us, of course, are the stochastics coming up here nice and erect, pushing past the middle line of the neutral line there, and we can see that the 2-day time frame giving us that longer period sort of look at things, thinking that if we did pull back down to 1600s, maybe, you know, we're still in a position where we're kind of turning things around. The weekly time frame not looking quite so great. You know, we have come up here and put in highs. Wow, that's busy, isn't it? We have come up here and put in highs, and it's not bearishly divergent. Everything's overall quite healthy, but of course there is this question of, have we seen enough? And the question really boils down to, was the high that we had previously in at around about 2 grand down to the low that we had previously enough? And I would hesitate, but I would say that 36% retraces are indeed normally enough to see things, you know, kind of continue on the way up. If you've looked at plenty of analysis over the last few years, plenty of people right now will be comparing, you know, the pullbacks we've seen in previous bull markets, and 36% is in it around about that sweet spot that you might be looking for. So are things set up pretty nicely? Well, they are overall. You can see here in the weekly time frame that because we had a high followed by a low, that the chances are, if you just drop down the way, that there's sort of inflection going on here, some sort of format. If we pull down the way and then go up, then it could maybe start to look like a sort of bull flag of some sort. Overall, if we go on further down and up and down, then maybe you'd be looking at this and kind of thinking, is this distribution at the top? Which means that what we really need to see is that if we're going to be conducting any sort of consolidation and pullbacks within the next wee while, that we don't want to see the prices dropping down below $1,000. I know that that sounds disgusting, because it is, of course, a massive drop down in the prices, but we've experienced this 36% one, and like I said, 36% is actually tolerable, believe it or not, during the bull market, but actually moving past $1,000 at the moment really kind of no longer is. Right, cool, think so. Probably a couple little things I could point out towards the end. 1 hour time frame looking pretty good. Overall, have we got some divergences though? Oh, I'd look out for that. So right now, I suppose the last thing that I would mention is that, of course, if we do see a pullback which consign any of these highs at the minute towards being a local high, then of course they're going to come in with bearish divergence. I'd watch out for that. As you can see there, bearish divergence. As you can see then, therefore, this is probably going to be like a wedge. Just drawing this in here, just let me verify that. Absolutely, there you go. So there it is. Right, cool, done. Probably enough in this video to convince you to come back to a live stream someday for fuller and better explanations. But if you're just looking for the TA, well, there you have it. Watch the previous video as well. Bearing in mind that the previous video was from last Friday, and of course you'll have everything you need to know for the rest of the week. But if you want to learn, and saying is that there's educational material here, and it's all really good to no, this is not snappy enough. Let me do that again. None of that was financial advice, by the way, people. I'm not a financial advisor. Always do your own research. None of that was tax, insurance, trading, money, financial, none of it. No advice, not advice. There is educational content here, okay? And I really try to help you. I empower you, the individual. Now, I will not show you my trades because I think it's unethical. Also, I think it probably breaks several rules on the old YouTube and American law as well, probably. As well, moreover, I don't think that sort of thing is useful. Instead, what I try to do is really help you make your own mind up about things, and to help you do that research, and to help you do that, you know, to be your own financial advisor. I'm just a spirit guide, and I really thank you for tuning in for that episode.